United States Steel. Is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. US Steel has no growth, in fact negative at negative 14.48% per year going forward. You shouldn't be a fan of a shrinking company. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio to me is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. US Steel has a great PE ratio at 4.41. Just about no hype, and that means not many investors are paying close attention to the potential of this stock. Dividends should be an obvious metric and something a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating. You're not investing. US Steel pays a small dividend at 0.88%. It shows me there's enough profits to pay something to shareholders, but we'll see what else. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. US Steel has good management with an ROE of 12.9%. Combine that with the dividend and things are starting to look decent. Free cash flow is my way to quickly evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up other companies, the better to research, and more money for marketing. US Steel has bad cash flow to the tune of $1.73 billion. Unfortunately, there's not enough cash flowing in to expand or compete with the major steel companies around the world. Okay, as I said, these 5 metrics we just went over tell me what kind of business we're dealing with. With a business grade of 35, we're dealing with a disappointing business. Too bad there's no growth. There's an alright business here, but without that growth, it's really not worth it. But before we get our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, US Steel is a disappointing business, but let's see what the price tells us in terms of investability. Nonetheless, US Steel is worth $27 per share. Right now we're looking at an undervalued stock. Pretty good numbers, and if you're looking solely on price, this should check your box. And now that we've got all the numbers down, we put it all together and get our final grade. US Steel has a final grade of 41, and that makes it a below average long-term investment. For me, basic fundamentals and even the price are there, but the lack of growth is really dragging this company down. But hey, after this video comes out, anything can happen in the next few days, weeks, months, even years. But long-term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.